Apple has 2.5 billion people with active devices every day. That's an extraordinary head start versus anything Google can do, anything Meta can do, anything Microsoft can do. Microsoft and OpenAI do not touch billions of people directly.
Welcome, everybody. Epic Trends with Friends, six dudes, which is epic because we invited 4 women and all of them asked how many dudes were coming, and we said 6, and we got no response. And in fact, I got blocked by 2 of them. So welcome, everybody. Here's a Hollywood Squares. We've got JC, the Cuban Missile Crisis. We've got Riley, long hair Roseby, with this grass clippings hat. Huge news will be announced by the time we air this. The Grass League is being announced. It is the masterpiece of my thesis of the degenerate economy. We have launched with Bleacher Report and Warner Communications, Warner Media, and they will be airing the first tournament on TNT and HBO. Bleacher Report will be live streaming this. It'll be the first $250,000 amateur golf tournament at our par 3 course. JC, pretty cool.
Very cool.
Yeah. So very rare for we'll have him on the show next. Very rare for a company in its first year to get a major media deal around a sporting event. And I think Charles Barkley might be the analyst. So it's just going to be a party.
I might have a worse swing than Charles Barkley.
I was going to say, we need Charles to play.
Yeah. You'll
JC, that's a tough look. Dude.
You'll be in the Cuban versus, you'll be in the communist tournament, the Cubans versus the Russians, and you can play with wood hickory golf clubs. All right. Phil Perlman up next, not wearing a hoodie. So maybe it's not Phil, but we'll see. He may be just AIing us. And then, of course, in the goggles, because he's protecting his identity, Michael Parekh, who's going to share, I think, the secret Goldman Sachs partner handshake. He was managing partner at Goldman Sachs, the only person at Goldman that's willing to talk to me still after the ridicule that I've given that famous organization. The vampire squid is wearing a vampire squid today. Michael Parekh, who is probably the smartest person I know, introduced to me by Fred Wilson. JC is going to love this. Braden's going to love this. 20 years at Goldman, managing partner through 2002, through the internet bubble. He was head of internet research. No text messages were found between him and Henry Blodgett, so has not been excommunicated. And that's an old inside joke. And Michael is somewhere in the metaverse. He is a geek of geeks, loves toys, been playing since the early day of the internet, kind of sat out the crypto thing. Him and I used to chat about crypto. He's been on the Stock Twitch board. He loves markets. His
Substack is great.
His Substack is phenomenal. For free. He's writing a daily AI Substack where the accolades.
He just tells you what he thinks. But he's
playing with the toy.
And he knows everything about AI. It's amazing.
Yeah. So when AI, he had been making some semiconductor investments during the crypto years, and didn't tell me, of course. So we'll get into that. But I probably would have passed and said, "Listen, I'm into oil and weed," and so has been stepped aside for crypto, didn't fully care about it, and is all in on AI. So he's going to help us talk about Apple Vision, AI, and then Braden, of course, FinChat, which is an incredible product. JC even loves it. When JC and I like something, that's always a good sign. And
that's a good track record.
It's a pretty good track record. It's happened twice, FinChat and Robinhood. So so we're excited about having Braden on. He's going to walk us through some charts of how FinChat, the magic of FinChat AI, and give us a brief intro. But first, everybody, Michael, welcome. I like the background. So is it the best toy that you've seen in tech since kind of the iPod? What is the Apple Vision Pro, and how cool is it?
It is a toy. It is an expensive toy. However, if you look at it in historical terms of it, the top 10, 12 products, this thing is actually cheaper today. It's a testament to Moore's law. Than, the Mac just passed 40-year anniversary about a week and a half ago, and that thing was in today's dollars, $7,300. It listed at $2,500. So you could buy two of these things. One, as Howard, I think you bought one for yourself, and you bought one as a collectible.
Yes, and I bought one for my son, and if he shoots 10 under, he will get that. So it's probably I have 3, put it that way. So you were excited to get this, and out of the box, is it easy to use? And what's your favorite thing? You wrote a post about it. Obviously, people can go read it. But for me, It would be movies. It's just airplane. For you, what's the funnest thing so far?
For me, there are 3 things that are I did write about it. Number one is it's the movies. It's literally having an AMC theater stuck to your face, and it's extraordinary how intimate that makes it. It makes you want to go have popcorn immediately. It's really spectacular on that front. Second is if you have any recent Apple Mac or laptop, you stare at it and it pops up a huge virtual screen. Obviously, for geeks like us who travel and so on, this is hugely potentially helpful on planes and things like that. And you can have multiple Safari windows and apps and so on. So that whole virtual thing. And number 3 is because of the 3D spatial cameras, etc. So a lot of things like sports, music performances. There's a wonderful Alicia Keys demo in here, rehearsal, where you feel like you're in the studio, as an invitee. It's an extraordinary feeling of. We've all tried the VR and so on over the last 20 years. It's just that this is done classic Apple style. To Howard, your original question, is it easy to use? Yes, I had my sister, who's not a techie, put this thing on, etc. She figured out the whole clicky thing in less than 2 or 3 minutes. The Apple just made insanely hard technology just super easy to use.
And they own the stack, right? Is this their chips too? The M3 and stuff?
It's got the M2 and the R1. So it's chips galore. It's got probably more advanced chips than most of our computers and laptops, and half a dozen cameras and sensors and so on. It's got LiDAR. Even Elon doesn't have LiDAR in his Teslas. This thing's got LiDAR, which is why, by the way, one of the most fun things about this is that literally you can put virtual windows in every room, walk away, come back, and they're sticking right there. The positional technology is extraordinary, that you can put sticky notes. You can, if you're at the office, you can put sticky notes on top of everyone's heads, walk around across all the cubicles, and then come back. And when you're looking at that person, say, "Hey, Sam, did you do what I asked? Because I see there were 3 things." You don't even have to remember that. I don't need an Elon neural chip in my head to remember that stuff. I can just put a sticky note, which no one else can see. That's the fun thing.
That's cool. The other thing is Elon can tweet that he has LiDAR and sell 10 million units. So it doesn't really matter to Elon what Apple's technology is, because he could just bully people into buying his stuff. So with Tim Cook and Apple, I think they're undervalued. Like, we'll get into I don't care about the stock really. It's still one of my biggest positions through QQQ in the stock. I don't think they get credit for owning the chip and the whole stack, nor could they, right? Because you don't break out the growth. It's all stack. So I don't think people really understand that Apple is LVMH. So they have, LVMH is margins and scarcity, high margins and scarcity. Apple is high margins and abundance, right? And I don't think people still get that. Go ahead, Mike.
I think you touched on 2 very key pieces. Apple is uniquely positioned in owning the whole stack. If you look at the Magnificent Seven, no one comes close. Obviously, Microsoft is spending extraordinary amounts on hardware and their own chips, in addition to NVIDIA's chips, etc. Apple has been doing silicon for a long time, which is why, by the way, their laptops just still 3, 4, 5 years ahead of anything from Intel and Qualcomm and AMD and so on. and then now they're bringing that advantage to this latest platform. So that's just, it's an iteration of their technology ownership. And then the other thing that you're touching on is that because of that ecosystem, not just the chip stack, but because you have millions of apps on Mac OS, iOS, Watch OS, etc. One of the first things out of the box in version 1 of this thing is that when I've got all these screens going, what we forget is that I've got multiple OSs running from Apple. I've got Mac OS, I've got Vision OS, and pretty soon I'll have some Watch OS things projecting, and it all works together seamlessly through the apps and data and so on. And that's only possible through the Apple ecosystem. Apple has 2.5 billion people with active devices every day. That's an extraordinary head start versus anything Google can do, anything Meta can do, anything Microsoft can do. Microsoft and OpenAI do not touch billions of people directly. As extraordinary as OpenAI and ChatGPT was in November of 22 when they launched, they went from 0 to 100 million users in 5 weeks, one of the fastest ramps.
Mm-hmm.
When they did their developer day in November of 23, they still had 100 million users monthly, is what Sam Altman said. And so no one asked, oh my God, if ChatGPT is so extraordinary, which it is, why did it not go from 100 million to 300 million or 400 million, right? And no one's talking those numbers. What I'm saying is ChatGPT is wonderful. Lots of people and companies are using it. It's just that it's not touching billions of people immediately. With this thing, and by the way, not just the Vision Pro, but also Apple is making AI show up on a bottom-up basis. It's what I call small AI in countless little applications on your phone, on your Mac OS, and that's the bigger picture that we're not seeing. That we've all been steeped in technology for the last 30 plus years. I'm a little older than most of you here, but the core message I want to just stress is that we went in technology from mainframes to mini computers to mobile. There was a 10, 15 year transition, like S curves that we talk about. With this with this generation of AI, we're seeing the mainframe, what I call big AI, and PC/mobile, which is small, what I call small AI, all happening in the same 1 or 2 years. At CES, I was CES this year in January. Everyone got the message. Everyone got that memo. Every hardware company from Lenovo to Asus to Acer, they all were touting AI chips, local AI chips in their computers. And so what I'm trying to say is that by the end of this year, most of us are going to be using all kinds of cool AI, ChatGPT kinds of functions, but they're going to be running locally on our machines. They're not going to be necessarily, they will go for some bigger tasks to the big mainframe, GPT-4, GPT-5, etc. It'll all work together. And that is the extraordinary change that's very different this cycle than anything before. So, and JC, we were talking about long, short, and all these cycles. It's just that we have to kind of be mindful of this compression of mainframes and PCs and smartphones all in the 2 or 3 year time frame, because as we are trying to figure out how to trade the various parts of the stack, the hardware companies, the chip companies, the software, we've seen these cycles. The hardware, typically the companies that are further down the tech stack get compressed in margins, and they have cycles in terms of demand and so on. This time, I have a feeling, just because everyone is trying to do both the big AI and small AI at the same time for billions of people, we're not going to see these financial cycles necessarily. The investors are going to see, I think, just a lot of a runway for huge amount of growth, both with the big AI apps and the small AI apps, at least for the next 3 years.
I love that.
That's as far as my crystal ball goes. So, yes, we have to worry about macro things in China and black swans and Europe and all these other macro things. But from a technology point of view, the secular tech wave
massive, is more
powerful than what we've seen before, just because they're all happening at the same time.
Is this good for cloud too? Right, this is all cloud based.
So it's massive for cloud, but it's also massive for devices in our hands, right? Apple literally introduced GPUs and neural processors in their Apple Silicon about 3 to 4 years ago. It's just that there weren't enough apps to actually use that stuff. Now with this AI stuff, which is just a step function change on what we used to call machine learning. It's basically that stuff, but now done in a massively different way, using transformers and probabilistic math. Now the GPUs and neural processors can have a lot of work to do. So one of the things I think we're going to see is people are going to be upgrading their phones and laptops a lot more frequently every year, like we used to do. Remember, some of you may be old enough. Every year we would go get a new PC because if
But why? So quickly, why there?
Because the Moore's law is continues to do its thing. The dang things get because they're putting more GPUs, more neural processors every year. The fabs, the TSMC is creating more efficient chips, going from 5 nanometers to 3 nanometers. Apple bought out TSMC's complete 3 nanometer capacity on the planet to make these iPhone 15. Next year it's going to be 2 nanometers. So exponential jumps in the processing power is why you want better processors every year now.
One thing Ram and the bears on Apple or the relative bears on Apple, not bears, but relative to other, is that Apple's upgrade cycles are shorter in the iPhone. This could catch people off guard because this could increase Apple's plan is they know what they're thinking in multi-year cycles. Okay. So just to be clear, Apple touches 2.5 billion people. Next in line, Catholic Church. Then who would be third? Facebook? I had to throw that in, Phil. Sorry.
Beautiful.
It was beautiful. So hey,
I have a question. Speaking of me.
Go ahead, Phil.
Enterprise, right? So this just sounds so wonderful. Like I'm just hyped hearing you talk. Michael, by the way, amazing to see you. My question is, does this just at some point affect the much broader market? All large companies, all enterprises, not just software companies, not just SaaS companies, but all, logistics, everything. All large companies are affected over time. Does that within this next 3-year time frame also, or does that extend longer period of time?
Let me just be clear. So the great question. Especially when you start to talk about it in terms of enterprises and lots of vertical industries, people say, oh my God, AI is going to be awesome in healthcare. Yes, it is. It's going to be awesome in education. Yes, it is. It's going to be awesome in manufacturing. Yes, yes, yes. It's just that stuff, when you're talking enterprises, large, medium, small, as we all know, technology always takes longer to develop when you're customizing it, because for enterprises and verticals, there's huge amount of vertical development of software and applications and the stack in those industries to do. That takes years. We've seen it with self-driving cars. We've seen it with wireless technologies, 5G. Everyone said that was going to Internet of Things. We're still working on it. It's 15 to 20 years. I wrote a long post about it. So yes, Phil, it will happen. But the next 3 years are why do I mention 3 years? Because that's typically our time horizon in terms of investing. And so a lot of activity, but be prepared for articles in the Wall Street Journal and the New York Times in the next year or two that enterprises are having a harder time scaling up AI, customizing it for their users. Because remember, this is not just give someone a gizmo and you go to town. You just need to use it with the data of the business. And that is one of the other major differences I can highlight, is that the data is the one thing that totally transforms AI at every stage. And every company, every vertical is going to have to figure out how to take their enterprise data, business data, personal data of their customers and fuse it in. And a lot of that, by the way, there are legal and regulatory impediments. In healthcare, for instance, when I get my X-ray done, and I to get it on the 5th floor of the hospital to move it to the 2nd floor, I have to sign 16 forms to do that because of HIPAA rules. So what I'm saying is, yes, it'll happen. It'll take years, but all this activity is going on right now. And this means hundreds of billions are going to be spent. When I was running the internet franchise at Goldman in the 90s, the telecom industry spent almost $1 trillion from 1995 till 2002 to build up the fiber infrastructure for the internet. By 2002, after the internet bubble crashed, less than 2% of that capacity was being used. We're going to see the same kind of thing here potentially, where this, every about 15 to 20 companies are spending $100 billion over the next 3 to 5 years building large language model trained. So, Microsoft, all the names we know, plus another half a dozen in China, actually a dozen or more in China, more in Europe. So there's a huge amount of capex. So this time, I think we're going to see $1 trillion or more easily expended to build what you're talking about, Phil, the enterprise.
So this is just, and so a scale, this is just way bigger.
This is bigger.
It's way bigger.
And the last thing I'll just say is that the AI models the technology is getting invented and reinvented as we speak, much faster. In the previous cycles, the PCs, once you had a base thing of the 8086 PC chip and so on, you knew what you had to do. Intel just had to keep making that chip, Moore's law double every 2 or 3 years, and Compaq and Dell could sell, upgraded computers. This time the software is changing massively across the whole thing. Every week I'm reading dozens of AI research papers, and almost every paper has major commercial implications. Your head spins. So it's like, then I got to go back and look at, I just put X amount of dollars to work on these half a dozen seed companies and half a dozen growth companies. I got to go talk to their boards and CEOs and say, by the way, everything we just finished talking about 2 weeks ago in terms of your product plan, we got to change it because this phase comes along and now all of this stuff is going to be redone in a faster, cheaper, different way. Sorry.
All right. No. It's fantastic. So it leads to a question I'm now in bringing JC and Braden. Braden is the ultimate definition of a small app. Even though I'm trying not to insult you. When Mike and I have been through this. He was Web 1 when I was DOS. So I didn't understand Web 1. Mike rode that wave. Mike loved Web 2. That's where we became friends. He started his own company. We all believed in Web 2. Mike sat out Web 3. We'll talk about that another time. And was just waiting. And I think it's a good lesson in what waiting does. It allows you to see the next big pitch, right? Well, you miss something, the bigger thing can come along. With AI, it comes back to like Web 2. The biggest verticals, I think, are going to be sports and finance. So when we went to look for AI and finance, because that's the big unlock, like how do you create what's the equivalent of a billion technical analysts on TradingView? Well, that would be a billion fundamental analysts on FinChat or whatever, hopefully FinChat, but whatever platforms exist today, right? Like the Web 2 created JC and a whole new way of people like JC being able to express themselves and share. The AI model will now allow a different type of unlock. So how are you, quickly explain FinChat and how you see that, and how you built it and how you think about what Mike says about ChatGPT versus Google Gemini.
The way that we think about this is just as Michael mentioned, there's this kind of verticalization of every category. And this, we see this happen time and time again with every trend that comes along. Is first, there's like the core, broad sweeping horizontal application. In this case, these are these open LLM, like the open source or the closed source LLMs. And then everyone's kind of looking to build on top of that. And the way that we looked at it is for the financial application, is close to correct is not good enough. When it comes to fundamental equity research. If you ask Bard what Amazon Web Services revenue was, it's off by a decimal point in the billions, which, 100 million between friends, it doesn't seem like a whole lot. But if you're putting your neck out on that, or you're providing research, or you're providing something to your portfolio manager, close is not good enough in this application.
Correct.
And so we just said, okay, well, how can we build technology on top of this to query a database of financial data at scale for 57,000 active listings and do it correctly every single time? And so that's the way that we think about it. And this will happen with every major vertical. It's happening with all the big ones first. It'll continue to niche down. History, it doesn't repeat itself exactly, but it always does rhyme. And so we think that this is going to happen with AI as well. And we want to be at the forefront of that, particularly for equity research. And right now, FinChat is very retrieval based in the fact that I can ask it to give me consensus estimates on Apple. Build me a discount cash flow model for Apple. Build me a graph that shows the services revenue and the iPhone installed base and all that stuff. It can do all of those things today. It just can't do them all at the exact same time. And when we eventually move to that, we think that that's more task based, where it's taking the non-value add pieces of your job and doing it for you. Like there's not a lot of like intrinsic value in
retrieval,
aggregating and retrieving data. It's how you like actually think about that data. And so we want to eliminate all the like non-value add processes in the stack. And we're starting there first. And then we move more to like task-based over time.
And Mike, what is that, a chip thing or a software thing, or is it all the above?
No, it's just a few months for us. That's all it is.
So it's that fast. Okay,
yeah.
Got it.
Yeah.
Because you started.
I think it's across the tech stack, right? For FinChat, right? It's the chip, as Howard said. It's the application pieces, and then how you're accessing various types of data pools and then processing them.
When this first started, everyone in the investing community in VC world, the consensus was that all the value is going to flow to the foundational models, and all the software was going to get commoditized really quick. I think this has flipped on its head in the matter of just the last 6 months, and a lot of the value actually flows to the software applications, while you see commoditization further on the model side and the infrastructure side. There's consolidation kind of in the core infrastructure side with Azure, AWS, and GCP taking more market share from the other players. But beyond that, you go to the middle layer there with the LLM, more commoditization, and then there's actually a lot of value being accrued to the top of the stack there in the software.
And let's talk about that quickly. JC can chime in here because he has data. So at StockTwits, one of the reasons I'm back and excited as CEO is we now sit on 16 years of our own data, right? Like that now becomes worth something. Quick question, Mike Braden. Is New York Times suing OpenAI the beginning or the end? I feel they have an open shut case. Depends on interpretation, but they have an open shut case. Do they not? Like theoretically, or no? Oh, they don't. Why?
It's the beginning of the beginning. It's every, look at huge things happen and the whole world knows it's a huge thing, and everyone, and it requires millions of data sources, and New York Times just happens to be the most prominent data source out there, and they're out with their bold. So is Barry Diller. He's leading the charge and the flag because he owns a bunch of, and the reality is when you look at it deeply from a techie point of view, how the tech works, and then you look at the legal stuff, and I'm not a lawyer, but I play one on TV sometimes. But my point is that it's not an open shut case. Okay. They did an extraordinarily detailed job. I went through every 200+ pages of the thing. It exhibits the prompt. They engineered the prompt to an inch of its life to make OpenAI's system answer the questions with the articles pulled out. You can do that. That's what prompt engineering is. It's basically asking questions. It's like when we talk to people, and OpenAI in a very diplomatic way in their response to this, which you can go look on their website. It was very balanced. They said, look, our system, it's like a fraction of a fraction of a fraction of a fraction of a fraction percent of New York Times content that was used. And the only reason it was anyway, it's very engineered. And when if it ever goes to a court, this will all get adjudicated and looked at, etc. But look, this is New York Times. This is just a flag to say we're first in line for our piece of the pie, whatever the compensation regimen. So this is a negotiation. This is not a lawsuit per se. So I would say it's not cut and dry. And then the other thing is I would just highlight is that the way AI fundamentally works, the large language models work, it's going to be extraordinarily hard when we look, even in the next 2 years, to figure out where the response came from. The way these systems work, this is not like how we've used computers for the last 58, 60 years. That when you put in a question, what is the sales growth at Microsoft for the last 5 years? Those numbers are sacrosanct. They're audited up to kazoo. There's no muss or fuss when you're asking probabilistic models questions on data that is basically the entire world's digital information. The answers are going to vary. So no, this is going to be very, very hard. Our copyright systems are going to have to be rethought in a dramatic way over a 10, 20-year period. But in the meantime, the current copyright companies will get something, but it's not going to be nearly what they think it is going to be.
Got it. Very helpful. All right. Let's do what we normally do now and incorporate Braden, Phil, and Michael and JC. JC, take it from so we've now seen the big picture. Thanks, Mike, and it'll hopefully be a once a month regular. Phil, I want to get to JC before he has to hop, Phil, so save that question for a sec. But Mike, very good. We still have to get to Gemini and some examples of FinChat. But JC, knowing what's going on, because JC came in very excited about being short. And this is an idea. This is the name of this show, Trends with Friends. JC has been long, 18 months, been doing the numbers, new highs, new lows. Came in excited like a Cuban schoolgirl, to say I'm short the market. And, so tell me what we're seeing, JC.
I mean, just massive distribution. And it's funny that Braden is on. I didn't even know. I think Lynn's trying to get more Canadians on the show or something weird like that.
Just more portfolio company.
Yeah. Well, Braden and I were talking last week about certain, breadth metrics and things like that. Anyway, glad you're here because I can kind of show you just a coincidence. This is what's on our mind, right? It's a market of stocks at the end of the day. So while the S&P 500 might be doing one thing, the NASDAQ is doing that same thing, and the Dow's they're all making new all-time highs. How come there aren't any stocks left making new all-time highs? How come the new 52-week highs list is non-existent? Why are we getting so many bearish divergences in momentum and breadth, right? So let's take a look at a few of them. And it's not like one of those things where like, oh, JC's cherry picking some chart. There's one divergence. No. It's all of them, right? It's not like it's one thing, right? So that's really the point here. So just a good example, here's the advanced decline line on the New York Stock Exchange. That peaked back at the end of December. By the way, that's when the dollar bottomed. Not a coincidence, right? Part of the reason why we had been so bullish for so long, a lot of that was dollar weakness, right? So one of the things coming into the year that was going to turn us potentially more bearish, right? We outlined that coming into the year. One of them was dollar strength. Sure enough, we're seeing the dollar strength. The day that the dollar bottomed, the advanced decline line on the New York Stock Exchange peaked, right? And that's stocks only, by the way. So go to the next one. So here what we're looking at so this is another great way to kind of just show that fewer stocks are going up, right? There's a lot of different ways. There's nothing magical about the 50-day moving average or the 200-day moving average. It could be the 20-day moving average. It could be the 63-day moving average, right? Pick your favorite moving average. It's going to tell you the same thing. Fewer stocks are going up. Right? So the percentage of stocks above their 50-day moving average, again, peaked in December. The amount of stocks above their 200-day moving average and longer-term uptrends also peaked in December. We have the fewest amount of stocks above their 200-day since early December. Currently, the fewest amount of stocks above their 50-day since November, right? So while the S&P 500, the headline is new all-time highs, there aren't any stocks left participating. Last Friday, for example, the S&P 500 was up 1% on the day. 2/3 of the New York Stock Exchange was down. 75% of the Russell 2000 was down. Half the S&P, even though it was up 1%, half the S&P was down. Most stocks were down on Friday, but that's not the headline. The headline is new all-time highs, right? But you can see here, again, I'm not cherry picking data. Pick your favorite moving average is going to tell you the same thing. And Braden, here's a good one. So here's the New York Stock Exchange new highs list, which peaked on December the 14th. That was almost 2 months ago. And with new highs in these averages, not just the New York Stock Exchange composite, which I would argue is really, really important index, S&P, Dow, NASDAQ, the whole thing. The new highs list is non-existent. 1 month highs, 3 month highs, 52-week highs. Like, we're just not seeing the highs that we were seeing before. So I think the market's vulnerable. We're short both the NASDAQ and the S&P through puts. So very aggressively betting on lower prices for the indexes and stocks. We're literally shorting Dell as we speak. We're shorting Dell. I'm with Sean here on the Slack about certain strike prices. So literally shorting Dell as we speak. Already short Lululemon. So look at consumer discretionary relative to staples. You can keep going down. Well, here's, the vulnerability. I think you might want to point it to the small caps, right?
Is there a whoosh out there, or is you just see a, like,
I don't think we're anywhere near. I don't think we're anywhere near whoosh levels.
It's
quite
just,
the opposite.
Just a sell-off,
I mean, listen, every big correction starts out as a small one, right? But not every small correction turns into a big one. So I don't want to say that this is not a big one. There's little evidence that would suggest that it is. In fact, we were joking that I could see ourselves right around St. Patrick's Day, double fisting some beers and buying weakness, with sentiment sort of, at washout levels around St. Patrick's Day. I could totally see that situation. But in terms of like a whoosh, here, I'll give you a great example. And this is something great too, Braden, is the sentiment, not just the breadth. So here are newsletter writers. So this data goes back to 1963, I believe, or 67. So the data goes back a long time. The guy who invented this started aggregating all the newsletter writers, thinking that would be good information. Like, if the newsletter writers are bullish, it's a good time to be buying stocks. As it turns out, it was the exact opposite, right? And the guy, kudos to him, discovered it right away, like still in the 60s. So this thing goes back forever. They're great contrarian indicators, right? Notice here, you'll see that this is the spread between bulls and the bears, Investors Intelligence Survey. So you'll notice that newsletter writers are the most bullish that they've been since 2021, right? Now is when they're telling you to buy stocks. 18 months ago, when the market was bottoming, they were telling you to sell stocks, right? So you see how this works? So they're incredibly optimistic.
I think it's a better indicator on when they're negative than it is when they're positive, but I hear you. I think it's a better indicator when they're negative.
The point is, sentiment is no longer the tailwind that it's been for the 18 months that we've been bullish, and it is now a headwind, right? That the market needs to take care of.
I just want to make two comments quickly about the psychology of this. First of all, I want to talk briefly about JC's brain, okay? Because there's this concept called cognitive flexibility, right? When we are able, so what happens is a lot of people become perma bears or perma bulls based on their outlook on life or their positioning in the market, and they stick to that and they stay in that mode, and they, despite evidence, are unable to break away from it. And I just wanted to point out, JC is right now, he's been bullish. All of a sudden he gets negative, he gets bearish, and now people are going to bust his balls about it. And the thing is a beauty to watch. So if you are a novice investor or even an intermediate investor or even a pro, watch what he's doing right now. He is just looking at evidence. It's very cold. It's very simple. And he's changing his position based on that.
And I appreciate that. I appreciate that, Perlman, but I want to reiterate something. Some people who might not follow our work, and a lot of people don't, right? Obviously, a lot of people do, but there's many who don't. So they're like, oh, JC just flipped, from one day to another. And it's like, no, because if you've been following along, number one, we laid out coming into the year what it would take for us to get bearish and start getting short. Those things have been happening over the last month, number one. Number two, just the way we were executing trades. If you guys recall, we've talked about it on the show. We were no longer just buying stocks. We were no longer just buying call options like we were 3-4 months ago. Like, now we were selling out of the money calls, right? We were doing different things, already hedging our bets because things were changing. we weren't necessarily going short, but we were taking the other side of a lot of our positions because the market dictated that. Now, last week, we got enough data to actually get short, right? It's a process. It's not an event. It's not like I woke up one morning, I'm like, oh, that's it. That's the end of the world, right? If you've been following along, you've been seeing the transition sort of, it's a process. It's not an event. We've been talking about this and things keep getting progressively worse. It's like, JC, what is it going to take to get more bullish? Well, if more stocks start going up again, that's a good start, right? As opposed to more stocks going down and fewer stocks going up, right? That's a good start.
I think the best we can take away from this, and I love that there's a word for this, Phil, is that probably not the best time to read newsletters, Beehive, Substack, and go, oh, this guy's smart, right? Because they got NVIDIA right. It may not be the best time to enter markets. It may be a good time to just, if you don't like being out of the markets, just stop adding to the markets right now. Underneath it all, though, JC, I won't go through my charts because I want to let Braden and you keep going with Phil and get to the Eli Lilly and Novartis and Gemini. There is a lot of stuff interesting, right? There's Simon Property Group, right? Boring, not going anywhere, but really that's supposed to be out of business post-COVID. High-end malls, right? SPG. What the hell's going on? Like no one shops at the mall. So maybe there's a lot of stuff under the surface that might start working, right? Maybe malls in the cities are going to get repurposed. The Toyota broke out. To all-time high. Toyota broke out to all-time highs while Tesla is running over itself. Now, that could just be Toyota being able to take advantage of all this tech finally, and Tesla digesting the fact that they've been the bullhorn in the room doing that. I don't know the ins and outs, but that looks bullish. As bullish as you could probably see a chart.
The Toyota thing, I'll just say, I mean, obviously they're riding the hybrid curve right now, which is the hot thing in autos. The consumers are meaningfully moving away from EVs to hybrids, and Toyota is the king.
Interesting.
Just FYI.
Okay, so stocks are working. I did hear that even in this chat before. And then I look at Web 2 leaders, and we don't have to pull up the chart. Spotify, Uber, Airbnb, Snowflake. Isn't Spotify supposed to be out of business now at 44 billion? Google's dropping out of the business. Apple could care less. Apple, if they took Spotify out tomorrow, it would add 0.0001% to Apple's market cap. So we're starting to see the winners of Web 2 digest and move higher, right? Basically, to me, all-time highs, because the people that owned it in 2021 didn't even really know what they owned. And again, I don't know if this continues because it's still a $44 billion company. Then you have Palantir. You've got Snowflake breaking out. You've got Eli Lilly and Novo Nordisk and Genomics kind of holding in there. So we could just be getting a rotation. It seems like, JC, there was a great chart by Eric, whatever his name is, from Bloomberg, showing the mad rush into US ETFs out of Chinese equities. And so that could be why we are most in need of a breather. Everybody's in the US pool and out of the Chinese pool. So I don't have the nerve to make that trade, but we talked about it a couple of weeks ago with Ram, China. So we could just see money not come out of the market, and we could just see money rotate.
Listen, I haven't been this short since like January of 2020, before COVID. Like we didn't know COVID was coming, but like we had all these breadth divergences, a lot of very similar things that we have now, actually. I haven't been this bearish and this short since January of 2020.
No, good data point. All right, so let's now move to, because JC, you got to go. Is there another one or two charts, JC, that you had before I let you go? Because I know you. Yeah,
I think this one is interesting. The vulnerability of small caps here. Well, first of all, throw the Dow Jones Industrial Average chart just to kind of put things in perspective. You know, the best 3-month period of the year is between November and January. It's well documented. They tell me every year that it's already priced in, right? And of course, in that 3-month period, the Dow Jones Industrial Average rallied 6,000 points, 20% rally in the Dow. You get that ripper into the end of the year and then sort of that hangover into January where the indexes continue, but a lot of stocks already deteriorate and momentum is diverging, obviously, as you can see here in RSI. And then scroll down, Riley. This is actually the time of the year where stocks tend to take a break into February. The first quarter of election years tend to be the worst quarter, and then it's more, back half of the year heavy. So this would be a perfectly logical time. Now zoom in one more, go down one more, zoom into what it actually looks like this year. And this is a perfect time for stocks to correct. In fact, if stocks didn't correct, that would actually be really unusual. So the fact that we're seeing breadth deterioration already before the index is correct, momentum divergences all right before, the classic, month for a nice good rug pull. And then what do you know? JP Morgan came out today apologizing, literally this morning, JP Morgan apologizing for being so bearish because they listened to their own strategist and now they're tactically bullish. That was this morning. Morgan Stanley just kicked their perma bear out of their investment committee just around the time that you probably need them. I don't think all of these things are a coincidence. So good rug pull now in February. I'm here for it.
And what wine do you pair with a rug pull?
I think you have to go with Bordeaux, right? Because if you want that funkiness, like flavor of like a good rug, the Brettanomyces that you're getting in the left bank of Bordeaux, that'll get you done.
Not a fava beans. What's his name? You wouldn't have a Chianti?
A Chianti, no, too much acid.
Else? Too much
acid
in
the Sangiovese. You want to go with Cabernet from the left bank.
No one's paired a rug pull with a Cabernet on a YouTube show before. Go ahead,
because they're not doing it right.
JC, this was awesome, and Phil, thank you for my phrase of the day.
Dude, I just love it, man.
But JC, just two questions in the charts. It's in terms of being short the way you are, but given the divergences that you're talking about, is there even a more concentrated trade potentially with the stocks that are doing dramatically better, like the Mag 7s and so on? Or is that too
that's a good question. There might be, but for me, I'm very selfish and greedy, right? So I want to know that I'm wrong as quickly as possible. So I would rather sacrifice perhaps a more profitable trade potentially to know that I'm wrong quicker, so that I could go move on and do something else, right? So I'm looking specifically for failed breakouts, like a breakout that fails to hold. So like Dell, for example, Lululemon, another one, in the put options for the Qs and the S&Ps, we got a couple of months, so we got plenty of time, slightly out of the money. So that's sort of the thought process. And that with buying puts already comes with a built-in risk management. Obviously, you're a limited partner essentially, right? So that's how I think through.
And last question is, I know China is a whole different ball of wax, but their markets are obviously the charts are the other way, like crazy other way, and you can't even legally short there. So they potentially have a lot more fundamentally to go down the downside. But do you have a thought on China versus US? Because we talked about.
I want to put on a long China, short US trade so bad. I haven't yet. It's definitely going to work. I'm not in it, but I think that there's opportunity there. And by the time the next show starts next week, I might be in that. I'm currently not, but I'm looking at it every day. I'm tweeting about it. I'm asking people,
JC, I'm no John McGee, but I'm looking at this FXI chart right here, and I see a higher low, and I see above 2274 a higher high. And if I'm not mistaken, changes in trends occur with higher lows and higher highs off a downtrend, and lower lows and lower highs off an uptrend. And so is that, you tell me. You tell me what you think.
Go to the first chart, Riley. This is what I see.
I think you're
Go to
getting
the first
cute
chart I put up there. This is the one, Perlman. And by the way, nice work there with that analysis. A lot of hatred for China out there.
And Year of the Dragon starts Saturday.
Put up. The market is already front running that, Pearl Dog. This is how I see it. This is the chart I'm looking at. China making lower lows relative to the US and on an absolute basis. I got a text message from my father last night asking me what's happening in Chinese stocks. I don't remember my father ever asking me about what's going on in the stock market, ever. So shout out to Dad. asking me about Chinese stocks. Like, we got to be close, bro. We got to be close.
Okay.
Oh, he's bearish. Okay.
I think
All right. So
that's the signal I'm going to go with.
yeah, JC's dead.
I'm not an expert on this, but that's the signal.
I do have a question about those outflows, Howard, on that outflows chart. Do you think that could be in correlation to all the global X China ETFs that closed over the last?
It could be. Again, it's just one chart, and it just seems, I think JC's got the call on how to think about not blowing your brains out if you feel like hedging or doing some shorting. I'm just not super long anyways, right now. And I use this type of market to sell a few things, take a little off the QQQ and XLK. So I'm looking at new ideas, to be honest, right? Like some stuff is working, because there's still the 8 trillion on the sideline. And even if JC's right, and it probably is, for the trade, the election cycle year is still, I don't want to be like triple timing things. If you look at JC's election cycle year, I don't need to be cute enough to save 4% on a year, because I don't have the time. But I think JC, it's important to note how long we've been talking about on Trends with Friends, a year plus that we've been doing this. Is just like, why short? Maybe there was a week in there that we got a little bit nervous.
Yeah, in the third quarter. In the third quarter. But overall, I remember Perlman asking me, being like, well, JC, when are we going to buy stocks? I remember we were joking, buy in October and get yourself sober. Remember all that stuff? But it wasn't a joke. Like, that was real. And like, we did do that. And that worked really well. Remember, Pearls?
2 years in a row, we bottomed in October.
That's not a coincidence. That happens a lot.
Not a coincidence. Okay, so let's move quickly to a couple ideas that are blowing my mind, and Phil can chime in, and then we'll end with Gemini and JC if you got a hop. Eli, let's show people the power of FinChat. I don't know if we have the charts queued. One of the amazing things is the first product you built called Stratosphere. So talk about Stratosphere and how you melded it and why that's important.
Yeah, for sure. So the original thought was, let's build an investment research platform where people can focus on what matters, what drives the business. Perfect example is, you guys remember that Netflix quarter, Q2 of 2022, Netflix was a mega cap name, well established in as being one of the FANGs, and lost 36%, which is around 100 odd billion in market cap in one trading day, because they had their first net loss of subscribers since they started the streaming business. It was the first time. Now, there was a lot of reasons behind that. They basically cut off Russia and their subscriber count base. But the stock fell off a cliff. Investors panicked. Growth is dead. There's nothing left for Netflix. Reach saturation internationally. The multiple compresses 36% in one day. And I thought to myself, I was like, revenue is up 9%, if I recall correctly, year over year. If you compared Q2 to the previous year, but the number that was actually moving the market was the subscriber loss. And almost all investment professionals, even if they're using a professional terminal, are aggregating that data points off the filings by hand into their Excel spreadsheets, probably fat fingering numbers. And then relying on their FactSet, Bloomberg Terminal, or Cap IQ subscription for the rest of the financial statements. And we thought to ourselves, like, that seems like a huge gap that still exists. And that was kind of the original thesis and the original idea. That's translated really well with AI, because it turns those kind of core KPIs and revenue segments. It does something really interesting where the AI becomes not only impressive, but intelligent about those public companies. It's able to talk about like things that actually move the needle for them. So that's how we got here, and that's why we started to aggregate them. We do it for almost 2,000 companies internationally now today. And so when you were talking about Eli Lilly and Novo, I just pulled up easy comps on them. We could compare like the diabetes revenue segments, the Ozempic stuff. Like you can get a nice visual really quickly.
The key for me here is giving people context to understand how big this product is, right? They're known, Lilly's a big drug company. So for it to move, then it's basically now become 50%. This is not a tiny company. So tell me what we're looking at here and how quickly FinChat pulled this up.
Yeah, I pulled this up in about 5 seconds, but what it is it's pulling up Novo's diabetes care revenue line item, that's shown in blue, and that's compounded at around 17.65%. By the way, this graph is only showing from Q4 of 2019, so the last roughly 14 quarters. So the growth is even more tremendous if we break this out annually to when they started breaking it out. And then stacked on top of it, you see Eli Lilly. If I wanted to throw on Medtronic, Becton Dickinson on there as well, because they break out their diabetes line items, I could do that, in another 5 seconds. But it just gives you kind of an idea. I like doing these kinds of comps with like the hyperscaler cloud players as well, to see who's gaining market share, who's growing faster, and then what that total revenue line item looks like if you stack all three of them on together. And we're talking about a trend here, right? Like we put garbage in our bodies, and you get these kinds of results, and people need the magic pill. We've been talking about this magic pill since the early days of the internet, and the question is, do we have it? I think there's a lot of questions right now around, what will happen, what happens if you go off of it, what are the side effects? I think that there's still a lot to be TBD. But if you need to go back on it, you will. I don't know. It's better than the cardiovascular. It's better than the cardiovascular and health conditions, I'm sure, than you have from being morbidly obese.
Braden, I was wondering, did that just break out that? I'm trying to understand how we figure out a hit product relative to like the company size in the past. So how do we break out Novo Nordisk fat pill revenue, whatever it's called, versus their diabetes revenue, or there's Ambien revenue, or just Lilly's breakout drug? How do we help investors graphically see how big this is? Because that's what's led the stock up, right? What drives great companies are great products and cash flow. And I think that's what people have hard to grasp, is how big the drug is for a company the size of Eli Lilly. So, or Novo. Could you pull that up?
Yeah, I can pull up either of them. Here's Eli Lilly. We break out all their revenue segments here. We break it out by geography. So if you want to see like what the U.S. looks like in terms of compared to the total, and so you're looking, it's definitely more than half.
US, massive.
Yeah, you can see also like how much they're growing organically as well. So they're breaking out how much growth they have on the top line from price increases versus organic volume increases, and so you can kind of see what their pricing power looks like over time. But if I just wanted to look at the diabetes revenue, let's do it for Novo here, and you can toggle between their local Danish currency or the USD currency in a matter of seconds. So that's here. We'll just use USD for the sake of it. If I just break out Ozempic, since they started tracking it and breaking it out in their filings in December of 2018, break that out quarterly. This is just the Ozempic revenue that they break out in their filings every quarter. And so, this train has left the station. You've seen the stock go monster. And I think that there's an important kind of takeaway that the consensus on the street has been that if you didn't own Magnificent Seven in 2023, there's no way you beat the market. Like, that has become very consensus. I just ran the screen while we were talking like a minute or two ago on over the last trailing 12 months of performance as of yesterday's close, how many US stocks over 10 billion in market cap, so large caps, over 10 billion in market cap, and have gained more than 25% of their share price. That number is 179 stocks. And those are all large caps. So the consensus on the street has been, if you didn't own Magnificent Seven, you underperformed. The reality is that that's just not true. I mean, you had a really good chance of overperforming if you had them, but it has been a stock picker's market over the last 12 months. And it's not just been Mag 7. There's been a lot of names. I mean, look no further here than Novo or Eli Lilly. And it's not just a imagination. These companies are executing extremely well. There's a superior demand for their product. They're innovating fast, and you've seen the Ozempic revenue has gone from 650 mil US to 4.5 billion in just a few years. So that's why these stocks are going up. It's not because there's massive inflows. While that might be true, these companies are and their fundamentals are performing and doing better than they were just a few years ago.
So, and then the underlying, so that's what you can do with FinChat. It's finchat.io. It's really, but yeah, it's cool, Mike, right? Because this is the power of a small, and this is early. I think the other thing people need to recognize is there's zero room for error, but for the retail investor, and for the individual, this is like a 1,000 times X, like charts were and VWAPs and all these things that companies built in. We're at the first stage of the next stage of fundamental analysis. And Braden, what's the slowdown going to be? Prompting? Like people have to learn how to prompt? What's the trick? And and Michael, you can chime in here. What is the trick? And then I'll let everybody go. But I also want to get Phil talking about diabetes. But what's the trick of prompting?
When you see someone, maybe your parents use Google and it just looks a little different, how they keyword stuff, the type, how they approach using traditional search on Google. I think that this is, again, one of those things where prompting, there is a certain skill, just like there's a certain skill to Googling. But at the end of the day, it's actually more intuitive and more native than search is, because the more specific and the more context you can give the computer, the better the results. So there's not any sort of like magic around prompting. If people like to hack it and that kind of stuff, those things might be useful. But at the end of the day, the more specific you are and you talk to them, the way that you would want to give a task to a human on your team is to be very clear, very instructive, and show exactly what the deliverable should be and what they should look like. The computer handles those things the exact same way. So that's my only real tip is it's actually more intuitive than
it's a communication skill, right? Communication's hard, and this is a communication skill.
But
That's
Mike,
right.
You're shaking your head. So you think mainstream?
No, I think the fundamental, if you strip it down, the fundamental thing about AI is that these are now going to be, software is basically being redesigned to help us reason. And the biggest thing, that I heard a couple of years ago was that for the first time in history, regular people can program computers with language. We're talking to them, right? Prompting just happens to be the way we're texting them, etc. And already we can talk to these things, etc. And as Phil said, it's communications. It's just like it's so very hard to communicate to your team or any other person, your dad, how to do this, etc. Computers are no different. They're tapping different data sources, different rules to do this. It's just that what we're calling prompting, Howard, this is going to be with us for a very long time. How do you talk to these machines? And just like people, they're not going to be all the same, the way they come back with results, because they're all tapping, just like people are tapping different experiences and information and what they grew up with and their skills. The AI, AI is a very, very misleading term because it's not AI. It implies singularity. It's massively plural. It's like everything out there that is getting queried, etc. So it's AIs. And so it's just like people. And so, prompting is going to be an issue. It's going to be UI UX issue with how do we deal with this for a very long time. We don't have the answer, and we probably won't for a very long time, if ever. It's going to be a new skill to learn how to ask computers, just like it's where we've learned how to deal with people since kindergarten. How do you get things? How do you get that lollipop from that extra lollipop from that kid in kindergarten? It's the same thing.
Why are you excited about Google Gemini? And people can read this on your blog, but what are people not understanding?
Well, Gemini, the core thing that I stressed on in a post I did a couple of days ago was Google for 25 years has always had multiple bets. They have at least two of everything. And just with AI, before ChatGPT caught them by surprise, Google had 5 different large language model efforts, each costing gazillions of dollars. With Gemini, they're consolidating it. Theoretically, tomorrow, February 7th, they're supposed to announce that Bard is going to become Gemini, Palm is going to become Gemini. It's just like Microsoft. Satya Nadella is one of the smartest big cap CEOs. He figured this out, and he basically put all the wood behind Copilot. He said Copilot is our word for everything. Everything AI Microsoft does, whether it's Windows 365, it's all going to be called Copilot. And maybe Google is learning that lesson and saying, we're going to call it all Gemini. So we'll see. I think it's tough for Google. They will because they have various fiefdoms in the company. It's like a big Hollywood studio. It's very tough to get the studios to work together, even at Time Warner. I remember when AOL bought Time Warner. These are fiefdoms. And so that's a cultural thing, corporate culture thing. But at least they seem to be trying to put all their efforts behind one product, which is going to be easier for enterprises, for consumers, hopefully, to how to deal with, getting Google's AI versus OpenAI and Microsoft's AI. So from a brand point of view, it's going to be hopefully Google with Gemini, Microsoft with Copilot, and OpenAI with ChatGPT and GPT. Those are the three. And then if you want to go further down the list, is Anthropic with Claude, and then you can go down, 3, 4, 5 different other products.
And FinChat with FinChat.
And FinChat. And if you want anything to do amazing chart, go FinChat.
And how about Apple? How about Apple with that?
No, thank you. Apple, it's all bottom up. So Phil, they're not trying to sell like Microsoft a ChatGPT, a language model. Their whole thing is application up. So their photo app is going to have amazing AI. It already does so they're going to do it in a different way. Now, there are rumblings that at WWDC, June of this year, they are, Tim's kind of hinted that they have a large language model in the works. So maybe there is an Apple Chat or Apple Chat GPT version coming, but that's to be determined.
Okay, beautiful. All right, we'll pick up on the health stuff next week, Phil. Sorry about that.
It's all good. This was a great show. This is so much fun. So much fun for me. I mean, just amazing. Michael, great to see you. The insight.
It's great to catch up on this stuff.
This was a hoot. Thank you. See everybody. Phil, thank you. Howard, thank you.
Trend for Friends. See everybody next week.